Matt, great to have you in the studio. Thanks so much for joining in.
Of course, great to be here.
No, I mean, I take it from our pre-show conversation that you quite like what you're seeing in India. Just trying to understand from a market's perspective, does the election verdict change your view and narrative on India investing?
Yeah, you know, Neeraj, I think India has been an overweight country for myself for the past, call it 2 years, and I think the election result does not change that. Of course, the indigestion that we're going to have for a while with respect to maybe some more price volatility until we get a budget, that's fine. When you have big dips like that, as long-term investors, we should embrace that as a buying point. I've been telling a lot of our clients over the past really year or so, as markets globally have continued to march higher, don't chase the markets, but use downside opportunistically. And I think India right now fits that very, very nicely. So there's plenty of sectors that are levered to infrastructure, and the long-term growth tailwinds of infrastructure spending aren't going to change going forward. So I think you want to embrace that, lean into that, and be specific with the companies you own. Own higher quality companies where there is earnings growth going forward, and I think that sets you up very, very well. So no, the growth trajectory is still on track, and I still like India.
Interesting. Matt, so here's the deal. I mean, Samina was talking about how some of the global macro is favorable, right? Crude prices hovering below 80, and you know, at every rise, they are seeing this pressure. Very high probability that at some point of time in the next 6 to 12 months, we'll see rate action from the US as well. We'll see, of course, ECB acting as soon as June. How does all of this place the overall flows towards emerging markets in India, independent of what happens to policy? I mean, policy is an added thing in India, of course.
So I think when I talk to a lot of our clients from a global perspective, investors have been underweight emerging markets for a while. The US has really been the only place to be to generate alpha in your portfolios, and I think that is changing. Over the past quarter, you've seen international developed markets actually outperforming the S&P 500. You've seen a big rally in Chinese equities that a lot of investors have started to chase. India has been one country that a lot of foreign investors have missed. And as the equities continue to increase in the overall emerging market index weightings, anyone who's passive is going to have to start to allocate more to India too. And as an active manager, if you're trying to generate alpha, this is a place you have to be whether you want to or not. But I would think you want to be here because there are still plenty of alpha generation opportunities.
Matt, you started by saying you've been overweight India for a while. You also say there are many alpha generating opportunities. I'm wondering, you know, after the sort of bruising that the markets have had yesterday, so in that context, your answer would be very interesting. Where you see those opportunities, the traditional view has been banking, private bank space is the safe one. Is that where you're at, or you know, you want to venture beyond?
So the private bank space is still attractive because I think when you look at public-private partnerships, the private banks are in the best place to actually help lend and realize the infrastructure vision of India. But outside of that, infrastructure, generally speaking, I think is a big theme. So when you look at the industrial space, road and rail companies, those who are providing the actual equipment necessary to build a lot of those projects, those look very, very interesting to me. And even outside of that, you look at some of the auto companies, like an M&M, for example, it's not just levered towards a growing consumer, but also having a farm and implement business that I think is going to be more important. But the group overall has leverage to the overall infrastructure growth of India. So there's plenty of companies like that that I think are very, very attractive. And so when you see a big sell-off across a number of those names, that's the time where you want to start to pull the trigger.
So you talked about the farm, you know, exposure of M&M. Is that a space that now looks more attractive? I mean, the buzz is that the next 5 years is going to focus more on rural India, bringing rural India up to speed. Are those the sort of pockets that you will be looking at?
I think so, and especially near term, I think those look very interesting. I actually have spent the past 3 days meeting with management teams here, and M&M being one of them, and it was very interesting to hear also just about technology in general and how you can leverage and build technology platforms to show farmers how by changing the way they use implements or changing the way they use tractors, they can actually scale and increase their profitability, their business, as you build more and and more infrastructure, you have horticulture, viticulture, there's so many more things that you can bring to market more quickly through infrastructure development. So I think it's going to be a partnership between the two in order to get that growth. So, when you kind of look at where the votes came in as well, being able to provide the employment to that farm sector and help lift overall wages, the infrastructure fits into that too. So again, it just highlights how interconnected I think the growth levers are in this economy, and the fact that there are a number of opportunities across sectors, so you don't just have to own a traditional infrastructure company to have exposure to India growth.
Matt, a couple of stocks that I believe you like, and please correct me if I'm wrong, is Adani Power, Tata Power, and L&T. Those are available a lot cheaper today than they were on Monday. Are you buying lock, stock, and barrel in terms of those three names that I just mentioned?
I always like to let the dust settle first, so I never will pull the trigger immediately after a big loss. You never know what's going to happen today or the next couple of days, but yes, I think you want to start dipping your toes, and as we get more stability in the market, that's the time to start moving more capital in a meaningful fashion. But yeah, you look 15, 20% declines across some of those names. Granted, should they have been up 10+% on Monday, that's debatable as well. But I think the long-term fundamental story is still in place. And having talked to the management team of Tata Power yesterday as well, just the privatization angle opens up so many more doors too. So again, I'm very, very excited as an investor, and I would say I'm even more excited after the past 2 days than I was before I came to India. So the long-term growth story I think is definitely there, and for investors, I think as you look at China versus India, I think there's a clear case to be made for China or for India over China.
Well, very quick follow-up on that one. Did you own any of these stocks in your portfolio before yesterday's carnage?
Yeah, so we've had exposure to India and the country broadly speaking, and I think when you look at the growth, there's reason to continue to increase exposure.
And quick one on ICICI Bank, because I believe that's a pick from the banks that you like.
It is. It's been a great performer for us. I like the exposure both in terms of just their overall investments, but also the private bank side of things too. When you look at just the growth of wealth in this country and the opportunity set that there is to get broad wealth management exposure, they fit the bill and have that business embedded within a traditional bank.
It's interesting, wealth management.
I have one final question from my end. You guys have a large AUM. India's debt is becoming more interesting for global investors, particularly in light of the fact that there's a JP Morgan bond inclusion and some others lined up as well. Would investing in Indian debt be something on the top of my mind of the house, if not your strategy particularly?
So I'm not a debt investor. I look at equity specifically, but when I look at our affiliates that invest in fixed income globally, I mean, you can't ignore India going forward. And I think the long-term opportunity for India, when you look at reforms and building more liquidity in the corporate bond sector, again, there's more and more opportunities that I think will come over the next 3 to 5 years.
Okay.
Just two spaces, because you've been talking about how you're excited after meeting so many companies. You mentioned technology briefly. So I wanted to get your view on the India story on two specific spaces, AI, because that's what everyone's talking about. And the other would be the Make in India defense push, something which Prime Minister Modi spoke about in his speech yesterday as well. You've also seen these stocks flying. Wanted to get your sense if there is room for more, or anything really which stands out in your view?
So on the technology side, I think it's still a little bit more of a challenge sector. I think long term there's definitely opportunities, and when you look at India and the education and the fact that you have such a large pool of very, very talented engineers, there's a clear case to be made for the IT services sector growth, but it's subject to international challenges. And so the overall discretionary spending budgets across companies globally speaking are still constrained. And I think from the conversations I've had this week, that remains the case right now. So I don't know if this is the buy the dip opportunity in technology companies per se, but I think longer term you have to keep your eye on the sector because again, they're more exposed to global growth, which is also, I'd say, surprise to the upside across the board. With respect to defense, I think there's definitely tailwinds to defense companies. A lot of them have run significantly. When I look not just from India, but a global defense investment perspective, the companies that I like the most are the ones that are leveraging artificial intelligence and software into what it is they're creating, because that's going to be the way of the future, and that's, I think, where a lot of government defense budgets are being spent going forward.
Matt, it's of course great to know what you like, especially in a morning like this. But what do you think is a risk to Indian markets or incremental flows coming into India? Do these risks sit outside India, or any sort of local risk that you foresee that could potentially change your mind on the country or these stocks?
Yeah, that's a great question. I think what we've seen in India is there's a very robust retail consumer for Indian equities, and with just the general plans in place, you're going to continue to see, I think, retail involved. From a foreign investor perspective, India has for a long time been a show-me market. And as a result of that, I think the election volatility we've had might set flows back a little bit. But again, like we said earlier, people are going to start to come back because of the opportunity and benchmark changes that are happening. I think one of the biggest risks is that there might be some more infighting within the government, that there might not be as much of a unified vision towards saying we are in fact realizing a lot of these infrastructure plans, or perhaps a slowdown with respect to privatization that I think is really going to be a push to generate more efficiency and the earnings growth that you need for a lot of companies to grow into their valuations.
Well, Matt, great to get your perspective. Especially at such an important time. Thank you so much for joining us. Absolute pleasure to have you here in our studios today.
It's been great to join you, and an exciting time to be here for sure.
You have a great trip.
Thank you.